Good morning, Mr. Mike Rose. Thank you very much for doing this. I really appreciate your time.
Well, thanks for the opportunity.
For the listener, you are the CEO of Tourmaline Oil Corp, but maybe to get it from the source, what is Tourmaline Oil Corp?
Well, Tourmaline Oil Corp's Canada's largest natural gas producer and natural gas liquid producer. We've been in business for a little over 17 years, so started out during actually the financial crisis in 2008 after our sale of Duvernay Oil Corp to Shell, and we've grown from zero to a Canadian senior producer at about 650,000 BOEs a day. It's about 75% gas, 25% liquid on average. We have large and dominant positions in what we see anyway as Canada's two premier and most competitive on an international scale gas plays, so the Alberta Deep Basin and the BC Alberta Montney. I think we're the largest Deep Basin producer right now and about the third largest Montney producer in Canada. Busiest operator as far as meters drilled on an annual basis. So we run between 15 and 18 rigs on average. We are the owner of probably the largest future development inventory of the large cap gas companies in North America, and certainly the most diversified from a gas marketing standpoint, probably the only truly vertically integrated gas producer in North America. And I'm just happy to be able to work in the business every day.
And for context, the stock is about a $24 billion market cap today?
Yeah, plus or minus. Yeah. The goal is to grow that.
Yep. You also have a great last name. I have to get that out of the way, although we are not related.
We're not related, no.
Unfortunately for me, in the Calgary area, people usually lose interest in the conversation when they learn we're not related.
So, I think you're building up a pretty good following here. So
such is life.
Congrats on that.
Well, thank you. I appreciate your time today. I know it's valuable. You're also a big baseball fan.
Yeah.
Do you have the Blue Jays going to the World Series this year?
Well, I hate to disappoint people, but I've been a Red Sox fan my entire life. And so it's kind of a fun series right now. Mm-hmm. Red Sox have some injuries and Blue Jays look pretty good, but it's one of the best September's playoff races. So, the Blue Jays are only a game up on the Yankees, and Red Sox are in the mix. There's four teams that the Reds, there's going to be three wild card teams, and there's five in the mix, and they're all like a game apart. So it's fun.
It's interesting.
Yeah.
I'm also a Tourmaline shareholder now, so I know you like to do these sorts of things with shareholders. I picked up some in August after some of the renters sold off. So we both have skin in the game for this conversation.
Yep. Well, I appreciate that, and our goal is to make you money and pay you dividends and grow the total return.
Which you're good at.
Yeah, hopefully.
To go back to the beginning, maybe, to start, you were born in Montreal, if I'm correct?
Yeah, I was born in Montreal, and my parents were children of immigrants. So my mom's parents were from Ireland off the boat in the 20s, and my dad's parents were from York in England. They both fathers were small business owners in Quebec, and they stayed in Quebec their whole lives. My dad got transferred to Toronto when I was 4, so I really grew up in Ontario, in a place called Streetsville, Ontario, which was a fun town, about 6,000 people, and did lots of sports, and we had a lot of fun there. Hazel McCallion, who you've probably heard that name, she was the mayor of Streetsville. She used to come to my parents' Christmas party, so I knew her well, and then Mississauga took over Streetsville, and Hazel McCallion took over Mississauga. So, and moved out here, and I was a summer student at Shell in 78, then full-time in 79. So I guess I'm 47 years in the business, parts of 6 decades, I guess, anyway. And it's just been fun from start to finish.
Did your geology degree originally at Queen's University, if I'm correct?
Yep.
Was your plan always to be a geologist? What were you thinking?
Well, I started collecting minerals when I was 7 years old, because one of my dad's sisters had a mineral collection, which was like a box of minerals. So she gave it to me, and so I'd go poke around quarries and stuff when I was young, and then went off I was planning to take geology somewhere. I applied. It was things were good in those days. A lot easier for people coming out of high school than it is, for the kids now. There's so much pressure and, marks. I think I had the second highest marks in my class, and I think I was 79 or something like that. 79, you're not going anywhere in the current world. I decided I was going to stay in Toronto because I was playing baseball, and the scouts had missed me or something, so I better stick close to home. My parents said, "You're out of here. You're going to Queens. You don't need to be at home anymore."
Yep.
And very happy they suggested that to me. So
Worked out.
had a ton of fun there, and was fortunate to get hired as a summer student in '78. Came out here. I think there were probably 35 or 40 from our class that came out west with jobs. So it was was the end of one of the great oil and gas booms. The National Energy Program in 81, 82 put a bullet in that one. But in '79, I think Shell hired 25 BSc geologists. It was crazy. And the exploration department, I think something like 575 people, just the exploration department at that point in time. So very fortunate on timing.
Got lucky in some ways.
Yeah, for sure.
Did you ever consider hard rock, or were you always thinking soft rock and going west?
When I went into Queens, I was open-minded, but there were a few profs there that sort of encouraged it, and they were good mentors along the way, and so I ended up selecting oil and gas over mining. But lots of my pals at school were in the mining sector, and we took lots of courses on ore deposits and how that whole part of the world works. But I've never worked in mining, so I'm pretty much a soft rock guy, even though my favorite is actually hard rock, like Pearl Jam. But
Okay. But there was lots of good jobs out west.
yes, yeah, and learned a ton. I was at Shell from '79 till '93, so exploration, then development, then back to exploration, and the last job was running E&P research, which was a fabulous job, and got to interface a lot with the U.S. and Royal Dutch in Holland. And so it was like getting a master's in petroleum engineering. But Shell treated me really well. I had a ton of great assignments. I think I did some good for them along the way too, but sort of had an opportunity in '93 to go off on my own. That was a very tough decision because I was going back downtown from the research center and, was doing well at Shell, and I was going off literally to be the only employee of a startup in 1993 in May. So it was a tough decision. My boss at the time, who was the person that hired me, his name was Charlie Bruce. He was funny, very dry-witted Scot, just from Scotland, geologist. He actually encouraged me. He said, man, go do it. Yeah. So, and we've remained friends through the years. He passed away, but during the course of Duvernay Oil Corp, our second independent, he'd retired subsequently from Shell, so I got him on the board. So kind of got to go full circle because he hired me in the first place and gave me my first break, and then he and the family did well with Duvernay Oil Corp. So it's kind of nice to be able to do that sometimes.
Yep. So you moved out to Calgary in '79?
Yeah.
Do you remember your first day at Shell?
Oh, yeah. Yeah, I started in July, and it was Stampede Week.
Okay.
And they put you up in the West End, actually, for your first week. And I knew a bit about Stampede Week because I was a summer student, but it was just like, wow, this is going to be fun.
Good time to start.
Yeah.
And was your thoughts at the time, this is just a great job and I'm going to see where it goes? Were you thinking that you wanted to be an entrepreneur at the time?
No, not at that time. I just felt fortunate to have a job and learned as much as possible. And Shell was very patient with their training. They gave you a field study, so a field to go study, not necessarily a Shell pool, just so that it would be in the internal company database on how the hydrocarbons are trapped and can it be lead to something else for them from an exploration standpoint. They sent us to Houston after you'd been there for about a year for, 22, 23 weeks on, they called it basic training. And we had lots of fun with that as well. And so you were taught by some of the the smartest geologists and geophysicists in the world. So
Good training ground.
yeah, absolutely. Yeah.
And you were at Shell for quite some time before you started Berkley.
Yeah.
Do you remember when you started to realize you wanted to be an entrepreneur? Did Shell ignore one of your drilling prospects?
Well, I mean, Shell drilled some of my stuff. They didn't drill all of it. I learned from various leaders. One thing I learned was that, people like decisions to be made. And so I took that with me. And even if something that you were proposing was turned down, the best leaders explain why. So I had a couple of bosses like that. And it's like, that's for, thank you, Mike. This is very interesting. And, here's the critique of it. And this is why at this point in time, we're not going to be able to do that. And so I try to do the same thing. Learned another thing. I call it MBWA, management by walking around. Just go see people. So you can organize formal meetings. I've never been a big meeting guy, but my favorite thing is to just tour around the office and pop in and see people. And to this day, every time I go on one of those tours, I learn something I didn't know when I left my office, even though I think I know everything, but I don't.
Sure. Always.
Of course, now we got a big company, so obviously
lots
you're not going to know absolutely everything, but it's,
The 1980s was the National Energy Program. Do you remember those times?
Yeah, I remember a couple of, office mates or on, either side. A couple of them were just losing their minds. They were so mad.
Yeah.
And I, to be honest, I've been there, under 2 years. I didn't fully appreciate everything because, back in those days, none of us were involved in politics and energy policy. Government was sort of something that, did what they were supposed to, and none of us had to deal with them. Times have changed.
Yep. But things got better through the 80s, and eventually you came to the idea of starting Berkley Petroleum?
Yeah. It was a fella that I'd met socially. My wife, Sue, was jump horses. She was an equestrian, and so we'd haul her horse around on weekends occasionally in the summer. So I got to know a fellow called John Woods, who really was a true entrepreneur. He knew a bit about oil and gas, but at the time he was running a prawn farming operation in Thailand. And so he and I would kill time in between the horse events and, play tennis and have a beer. And he sort of had suggested he wanted to get back in the oil and gas business someday. And then he approached me in kind of the first half of 1993 and said, can you find me a package of properties to buy? Do you know people that do that? And I happened to. So I put him in contact with them and kind of suggested what, it ought to go for. And then he ended up being the successful bidder. And then he came to me and said, okay, well, I need someone to run this.
Prawn farming in Thailand and Western Canadian oil and gas seem maybe a long ways away from each other.
Yeah, but he was just a true entrepreneur. So, he was a moneymaker. So I came with the sort of technical supposed savvy. I really didn't know that much coming out of Shell, to be honest, other than the subsurface. And then, of course, he put the financial piece together. And when I started, I left Shell, and it was very friendly because it wasn't like I was going to a competitor. And there were some people wondering, why exactly is he doing that? But, being the only employee was interesting. But one thing John did tell me right away was that, well, there's some conditions on the financing I've secured, and my investors need you to be public by September of the same year. So, and you can imagine a geologist coming out of Shell would really have no idea about capital markets and how that part of the world all works. So anyway, we somehow got it done, and Berkley went public in September of 1993.
Was it a big risk at the time? Did you have a plan B if it didn't work out?
Not really. I probably could have gone back to Shell. I think they like me.
So had a job at Shell maybe if things didn't work out.
But they never said that.
And so what was the original value proposition for Berkley? What were you targeting?
Well, we bought a package of properties from Texaco, Canada. So it actually was a fantastic starter kit. So there were like 40 properties, most of them non-op, which meant you didn't have to build out an engineering staff. And, there were things you could buy, sell, and trade. And I did understand the land part of the business coming out of Shell because they were sort of part of exploration. So, and then I hired a couple of people from Shell. So one, Paul Lennon, who was an engineer but had been in marketing and all kinds of other disciplines, and then Bob Yurkovich within the first 4 months, who was, in my mind, still the best exploration geologist that I've ever seen. I'm not bad, but as far as pure exploration, Bob was the best. I was good at the engineering and the deal making and stuff like that, although Bob was a pretty good deal maker. So we had a ton of fun with Berkley. And of course, he was at Duvernay, and then he developed Parkinson's during the course of Duvernay. And so he's never been able to work at Tourmaline. So he's a big shareholder, but Parkinson's is a really tough disease. So that's sad for lots of us, but he mentored up a young geologist called Colin Frostad during Duvernay days, and he's our exploration VP right now, and he's awfully darn good too.
Colin did the podcast a few years ago, so
yes,
it's another getting a few perspectives.
Yeah, and you've had Jamie and
Jamie, Marty.
And you've had Marty, because Marty was at Tourmaline, and then when we created Topaz, he was the logical person, but to go and run it, because he's an unbelievably good deal maker and creative and energetic, as you probably picked up. But it was Tourmaline's loss at the time. But I think it's worked out well for everybody.
Also, Jim Davidson and Steve Lark. So
okay.
A few perspectives on your circle. So I was curious where the name Berkley came from.
Well, that was John's.
Okay.
So he actually called it Berkley Petroleum because he is a Brit, even though it was spelt Berkeley. But when we were putting the company together, he told me the name, but I'd never seen it written down. So I actually made a slide deck for Berkley Petroleum, except I spelt it Barclay. I think he was wondering, maybe I didn't pick the right guy to run this.
Okay.
Yeah, but then obviously Duvernay and Tourmaline I've named. Duvernay, it's the source rock for all the Devonian accumulations. And remember, when Duvernay got set up, horizontal drilling didn't exist. That was in 2001. Well, horizontal drilling existed, but being able to stimulate and frack the way we do now didn't. But, Bob Yurkovich and I were very familiar with the Devonian and the deep play. So we thought, well, let's name it after the source rock that, provides the oil and gas for all these deep accumulations in Western Canada. And then Tourmaline, it's my favorite mineral, so it wasn't that difficult. But I had actually, when I started Berkley, set up a private company for me called Tourmaline Oil and Gas. And so, we were at a loss what to call the new company after Duvernay got sold. And I said, well, how about Tourmaline? You guys good with that? And so that's where that came from. Topaz is my second favorite mineral. So, so when I dreamed up the Topaz idea, I already had the name before I even had really the business plan put together.
Made sense.
Yeah.
It's hard to imagine nowadays, but at the time during Berkley, you got the money to start it up, but was it difficult to get the next equity raises? And did people kind of help you out along the way? How did that process go?
Well, technically and mentoring wise, lots of people helped me, because, one thing I learned was that if you don't know something, don't fake it. You better go ask someone that does, because, you've got other people's money at risk. But, in the 90s, it was kind of rock and rolling out here. You got to remember that's when Peters and Co. started, and First Energy, you mentioned, Jim Davidson and, other firms. And it was the Wild West out here. And so, raising money and drilling wells, and Berkley grew, there were some acquisitions, obviously the first one that started, and some other ones along the way. But, a lot of our growth came from, exploration wells, true new pool wildcatting. So it was kind of a roller coaster, and it was fun times. Yeah.
So it wasn't as hard to get the money, even though you were starting out?
Well, it wasn't so hard to get the money at first. I mean, if you drilled a bunch of dry holes, it certainly got tougher.
Right.
So nothing's ever changed on that front. Show me some results and I'll give you some more money.
And so how did your first well go at Berkley?
There's a beautiful picture that I took. I love photography. Of course, I think it's a beautiful picture, but I'll show it to you sometime. And it was out at in the Carstairs Crossfield trend, and it's a beautiful picture. And it was a suspended well that we never completed because it was essentially a dry hole, but we just left it suspended, so we didn't have to call it a dry hole. The next well in that area was Carstairs, which was, by Berkley standards, a huge discovery. I mean, it was a 30 million a day well with lots of liquid, and ended up being, 30 BCF and probably 3 million barrels. So that was one of the first big wells that propelled us. I drilled a well at Progress, a little short lateral, interesting lateral, back in those days into a Gething sand, and it was like a 10, 12 million a day well, which was, we drill those routinely now with our horizontal multi-phase fracking, like a 2 or 3 million a day gas well in 94, 95. That was a big win.
So your first well didn't necessarily work out, though.
No,
were you stressed?
But the second and third did.
Were you sleeping that night, or how did that week go? And you were a little worried that the first well maybe wasn't panning out.
Yeah, but bear in mind, we had these, 40 properties. We already had some base production. We had, small unit interests in Carstairs and Crossfield. So we had cash flow and production right out of the chute.
I see.
But, the intent was to grow it through a series, meaningful growth from the series of wildcats, which, ultimately did work. Yep. But, I knew from my Shell days that you want to get the focus. When I was at Shell, it was management focus. When it was Berkley, it was investor focus, is always do exploration in a basket. So, it's not boom or bust on every well. It's like, here's the basket of prospects we're going to drill. And, hopefully of the 5 or 6 you're going to drill, 1 or 2 work. And then those are the ones you talk about.
Yep. But you had cash flow from other production in Berkley at the time.
So, that initial acquisition was a great way to start.
Things went well through the 90s at Berkley, and eventually you ended up selling it to Anadarko in 2001, if I'm correct?
Yeah. But, we didn't do everything right at Berkley. So, we'd gotten our debt up to, probably 3 times debt to cash flow. This would have been in 2000, and commodity prices had turned a bit, and, we'd overpromised, under-delivered on a couple of quarters, and Hunt Oil ended up, when our stock price was down, it had started to come back. But in November of 2000, we took a big leg down, and then we're working our way back. But the day after Christmas, Hunt put a hostile bid in. So kind of a bit like the Meg situation now. So I've actually dealt with one of those. And so we were producing, we were probably close to 40,000 BOEs a day at that point in time, and thought we were seriously undervalued. So we did the whole data room search for a white knight process. So had all kinds of companies through. That was definitely 24/7 time, and then Anadarko was the ultimate victor in that process. We still didn't think we got anywhere close to what it was worth, so we weren't happy that Hunt put us in play. And then I started Duvernay right away after, and we learned from. We did a ton of good things at Berkley, but as I said, we didn't do everything right. So, we learned as time went on. One of them is debt, and so progressively between Berkley, Duvernay, and then Tourmaline, we have less and less debt. Yeah, and so I probably have the best rested CFO in the business. Brian, you should get Brian on here sometime because we're like 0.5 times debt to cash flow, so that helps CFOs sleep at night.
The idea was to keep Berkley possibly.
Oh yeah, we wanted to keep going. Same with Duvernay. Shell came and bid for Duvernay for our Montney position because horizontal multi-phase fracking had broke. It started to happen. We were the third company to try the Montney horizontally with Duvernay. So it was ARC did the first one, Novintiv, who was in Canada then, did the second one, and then we did the third. I think we had 5 down when Shell came during Stampede Week of 2008 and bid. So it was sort of like a hostile takeover, but their bid was
pretty good.
Yeah, it was much above market at the time. So, but both were unsolicited bids. Yeah.
So 2001, you sold to Anadarko, which was bittersweet, and then you took maybe some of your ideas and started Duvernay right away.
That's right. Yeah.
But that was post 9/11. Was that a difficult time to get going again?
Well, we'd secured some capital coming out of Berkley, and so we started as a private company, and then ultimately went public in 2004. So we did some acquisitions, did some drilling, established that BC position, bought a pool from Anadarko, had a exploration JV with them for 18 months or so. So we had some activity to do, and then we were able to raise money because investors, especially original investors in Berkley, did well with Duvernay, and so we were able to attract more capital than we could at Berkley days from the public markets when we went public, and then established a big position in BC and a decent sized position in the Deep Basin with Duvernay. So Tourmaline is pretty much in the same areas that Duvernay was.
So before the original ARC, Montney well circa 2005, the idea with Duvernay was the Deep Basins.
The Deep Basin, and we had a play in the Doig, which sits above the Montney, that was quite extensive, and so we got most of our land and built our gas infrastructure for that play. And we knew the Montney was under us, and we knew it was hydrocarbon bearing, but we had nobody cracked the nut yet on how to commercially access it yet. And then it happened, and then we tried it. I think our first Montney horizontal tested gas production wise at about 5 million a day, and it took us, I think, 28 days to drill. So flip it around, you'd say in the North Montney right now, we drill some of those wells in 6 days. And we're testing some of them right now at 15 million a day and 1,000 barrels a day of condensate. So yeah,
but
technology is your friend, that's for sure.
You could see the opportunity in the Deep Basin. Even then, that was
yeah. It was all vertical, and the whole Cretaceous section's gas saturated. So there's multiple zones to pursue. And so we helped pioneer kind of, multi-phase fracking in vertical wells, and then worked with the regulator at that time, the ERCB, to allow us to, develop on a per section basis with 4 verticals because it was tight sand. And then, of course, horizontal drilling opened up a wonderful opportunity in the Deep Basin as well, because there's up to 15 different gas-saturated sands. There's no water. And, of course, you get much higher deliverability and better well economics when you go horizontal in those strata.
Do you remember when the first horizontal well presentation was given to you, and what were you thinking at the time? This seems like a good idea, and we should try this?
Yeah, well, Duvernay wasn't that big a company, so yeah. So, we were all driving it. So, yeah, it wasn't, it was something that kind of came from all of us. It's like, well, we got to go try this. And yeah, let's just make sure we can drill it for a reasonable cost.
Right.
Yeah.
Because the wells were expensive.
Oh, yeah. Yeah. They've certainly come down in price.
Duvernay in 2008 to Shell.
Yeah.
Which sounds like it wasn't necessarily the plan, but it worked out really well. And then you got your next company going, which was Tourmaline Oil Corp.
Yep.
Just after the financial crisis, I think. Was that a...
Well, it was kind of during it. So the Shell came, and I knew the fella. I see him lots. I still know him. He works here, but he was the Shell guy that came with the bid, and he had a Royal Dutch guy with him on the Monday of Stampede Week. And so it was, a big bid. It was $83, and we were trading at $57 at the time. And so, I got the bid, and first person I told was Brian Robinson. And we were, because even in those days, Stampede Week, you had all these conferences to go to. So we went to subsequent conferences when we knew we had this bid. So it was like, oh my goodness. But we had to decide, and we had to respond. So first person I actually called was Clay Riddell, my father-in-law, because he was a director, and he ran a charity golf tournament called Between Friends in those days. And I knew I was going to go to it because I usually did. But obviously I couldn't that morning on the Monday, and I just phoned him and I told him what had happened, and he said, "Oh, well, that's interesting." And he said, "Well, it's kind of up to you. If you want to keep going and reject the bid, that's fine, but it is a healthy bid, so you decide." So we organized a meeting that afternoon and got the board all on the phone, and then we decided to counter, which you have to. But the board was, on side. We'll do the right thing for shareholders, and in that case, that was the right thing for shareholders. But Shell wanted to go really fast, so we had a pre-acquisition agreement in place by the Wednesday. I made a presentation to kind of all the people at Shell who'd been working on Duvernay quietly and secretly. They had a whole floor in the Canadian Hunter building across the street. That was, in those days, the Canadian Hunter building from Shell, and that was their data room. So I went in. I knew half the people in there. And then Friday, they said, well, we'd like to come and do our full due diligence on the weekend, so we'll have a few people show up Friday after work. And there was a lot more than a few, but we went through the process on the weekend, and we signed the deal on Sunday night and got announced on Monday morning. So that was crazy. Yeah.
You were happy though?
Oh, yeah. Yeah, I think everyone was happy. Well, you're always a bit sad because, that's a company's gone, but everybody, internally and externally, did extremely well. And, feel good about it because that's the lion's share of Shell's LNG position for LNG Canada. I mean, that's what Duvernay provided. They had some other land they'd acquired at sales before they made the bid on us. But so that's good. And then we went right back into the same areas with Tourmaline and have built it up bigger than Duvernay was.
Although the bid from Shell was excellent and everybody made a good chunk of money, did you think to yourself that maybe Shell sees something here that we haven't looked at and we should hold on and this could be way bigger than we may think?
Well,
or maybe
yes.
you knew that.
And that's, what the board and management have to decide when when we had that first meeting on the Monday, there was lots of upside and we knew what it was in the Montney, but, how much of that upside are they paying for? At the time, they bid 2.5 times our 2P NAV. So that's a pretty big bid.
Right.
And it was like over 200,000 a flowing BOE. I know one of our directors said, nope, we shouldn't sell this for less than $100 a share. And so one of the other directors, he's still on the board now, Bill Armstrong, he won't mind me talking about it. As soon as the meeting ended, he phoned me. He's like, Rosie, take that bid, man. Like, no, we're not waiting for 100. Take that bid right now. I said, Bill, don't worry. We're going to take that bid.
It was good to crystallize the value.
Absolutely, yeah. And then it put us all in a good spot when we started Tourmaline, because pretty much commodity prices from the moment Shell made that bid on the Monday of Stampede Week went south systematically. And so then the financial crisis people, in various phases sort of understood what was going on. And, there was panic for sure. I mean, we were sitting on the sidelines with cash, and it created a kind of rare window of opportunity, in late 2008, particularly in 2009, where some of the super majors were willing to part with, really prime land in the best plays. And so it was a great way to start. And we were able to, start to establish meaningful land bases in the two areas that, subsequently are our two big gas plays. And, that window has opened up periodically, but not very often. So we were very fortunate on the timing. And again, we had a loyal series of shareholders who'd made money and were willing to put, money in again, because if you made the money a couple times now, they'll support you.
So July of 2008, Stampede, you get the bid, you close it pretty quickly, but then financial crisis starts to hit fall of 2008.
Yeah.
But you have cash at this time and you could sense the opportunity.
Absolutely. Yeah. No, we got going right away. Like, honestly, like I was at work like the Monday.
Wow.
We had Duvernay set up. So, yeah, we were ready to go. Shell wasn't going to take us back. There was, no doubt about that.
And did you think to yourself, I know this deep basin very well and I still see some opportunity and this is what we got to do next?
Yep. Yeah. And not just me. I mean, we've always had
team.
fantastic staff and the team. So, we all, work together on, all of these plays. But I think we've got a really good, understanding of the subsurface. That's probably our biggest skill set. So it lets us, we were able to secure as Tourmaline moved along and evolved, probably amongst the largest amount of tier 1 land, puts us in a really good position to do, accretive M&A, and we haven't lost the interest in exploration. And so that's a huge opportunity right now because, most people aren't doing it. And the industry has lost a lot of the exploration, mindset and skill because, people have retired. So there's very few people left really interested in some of the deeper exploration and other opportunities. So.
And so the Tourmaline starting package, did you buy production there or did you just buy all undeveloped leases?
We did a couple acquisitions. One was from Encana in the Deep Basin. That was probably the first big, we sort of bought out some land from them and, didn't buy all of it. It was a joint venture. We subsequently cleaned the rest of it out. And systematically, we bought assets from Talisman. We bought assets from Shell along the way. So, And then we stayed close to Shell all the way along.
Yeah.
And particularly on the Deep Basin, because we didn't think in the long run they really wanted Duvernay's Deep Basin position. And then in 2016, they did say, we're willing to sell that. And they were actually running a public process to sell Gundy in BC. And so we put the two together and came at them with a bid and essentially bought Duvernay Oil Corp back. They kept Groundbirch, obviously, but we got Gundy, which we've turned into $400 million a day, and then got their Deep Basin asset, which, obviously really complemented ours. And that's what propelled us really to being the largest Deep Basin producer.
I think the Montney rights were included in that 2016 deal. Was that part of it? Did you get Montney rights?
Yeah, in Gundy. So it's in the North Montney.
Right.
So, they decided they wanted to monetize that asset, and I think put the money into Groundbirch, and because I think that was, obviously it is their source for LNG Canada. They'd bought British Gas, and so I think their debt had run up to $40 billion. So we were kind of watching this and thinking, and we went straight to like Shell International or Royal Dutch Shell with the bid that was kind of, it's around $1.3 billion between their Deep Basin and Gundy. And we were, able to get the interest of the CFO across the pond. And so he knew we could close and raise the money. So that's how that transpired. So initial acquisition phase was 08, 09, and then the Shell transaction, and then COVID was a huge opportunity for us with Tourmaline because we've always kept the debt low. We weren't happy with our valuation and gas prices and the energy macro, and it really started to fall away in the second half of 2014, but kind of just stayed in the doldrums. And we were looking at ways to crystallize value, and that's when we had the Topaz idea. And so we'd set Topaz up already in the second half of 2019, which created a pool of capital because we could see, a really good M&A opportunity setting up again. And then, of course, none of us had any idea, what was going to happen in March of 2020. So, So then we were, again, well capitalized and didn't have debt issues, and were able to do some really, really good, inexpensive transactions for a few years there.
Yeah. So speaking of the pandemic, circa 2020, throughout that time frame till 2022 roughly, you made a series of counter-cyclical acquisitions, Modern Resources, Jupiter, Black Swan, Rising Star, and then lately Saguaro. I think you got Crew during that time too. Some would say the best investments hit you over the head where it's obvious and that you don't need to really think about it. Did you see it that way during that time frame and it was just clear to you?
Yes, but you're always taking risk because, I mean, for the first 2 or 3 months of COVID, nobody knew what was going to happen. Like it was, kind of a trying time. Probably what we should have been doing because the stock got down to $7. We should have been buying all our stock back, but we were too chicken to do it then too. But the acquisitions happened. A couple of the least expensive ones that provide a big chunk of land in the North Montney for us were Chinook and Polar Star. They actually happened, prior to Saguaro and Black Swan and Jupiter and Modern. And so in aggregate, I mean, we actually had our strategy session with the board in February of 2020. We had Drew Tumbach, who was our VP land at the time, put together, just how big could we be in the Montney in BC. So we had all the companies mapped out, and we've been looking at them for a long time anyway, and how would all these transactions fit together. So we kind of executed that plan. We missed 2 of them.
Ironically, Black Swan was a result of the Black Swan Resources came about as a Black Swan event. I don't know if that irony is.
Yeah.
I'm sure you recognize that through the years. But was there a process you followed or was it kind of instinct? You had them all mapped out, it sounds like. And
we were transactional. So with Black Swan, I went to their big shareholders directly. And did it that way. I mean, we were working during COVID. So obviously everyone had to stay home, and I'm sure you've had lots of stories. It was odd times. So we were still drilling wells, and we cut our fleet in half, but we were still running 6 rigs. So we needed a skeleton crew in the office. So it was sort of like, at that point, I think we had 10 floors. So there were sort of 12 people for a couple of months. But, really certainly by July of 2020, we had 3/4 of the people back in the office. And we had some working from home, and, we followed all the rules. And so if somebody got sick, you had to send a bunch of, cohorts home. But that actually proved to be a big advantage. And it's mostly because everyone wanted to come to work. It was never mandatory that you had to come to work. People just didn't want to work from home. I tried working from home for an afternoon. And we have a very nice office in the house, which Sue had designed. And so, we were both kind of in it. And after about 2 hours, she just said, go down to the office. Please go down to the office. So I did. And then actually, landlord at the time, Oxford, they wanted to shut the entire office. And we said, okay, well, we're not going to pay any rent. And so they let us come back and have the 1 or 2 people per floor.
By 2020, you'd had quite a bit of experience in the industry. You'd probably seen the ups and downs. Did you get a sense at the time that there was opportunity here in a crisis?
Yeah, for sure. Yeah, and we'd already seen the opportunity before COVID even happened, which was the whole Topaz idea. So we'd created a $1 billion worth of capital that we could access for M&A. And then what COVID did, it just made everything cheaper than what it was in 2019.
And so where did the idea for Topaz come from? Were you on a run one day or in the shower?
No, I'd sit at the kitchen island on Saturdays working on stuff. And, as I mentioned, we were all kind of frustrated with valuations and, commodity prices and, how do we, make our stock go up and make our shareholders happy? And, how do we, create some more value, crystallize value that you knew was in the company, given we had an enormous drilling inventory then and we had all this infrastructure. And so that's kind of how it came together is, well, we could, get some value for the unbooked, recognized inventory via the GOR. And then rather than just create, another royalty company, the infrastructure idea was, well, we never wanted to downdrop a big piece of our infrastructure because, it's that infrastructure ownership that really helps us survive these, endless periods of low gas prices because it makes you a low-cost producer. But we could drop a little bit of it and then, create taker pays with the 5% of the infrastructure we dropped so that there was a flat revenue piece inside Topaz that was commodity price independent. And then there was the GORE piece, which is somewhat independent, but still obviously changes with the royalty moves with price. So that it was a bit of a hybrid, and I thought that would attract investors, and it did.
It's worked out well.
Yeah.
And at the time, I remember when Tourmaline share price was maybe about $7. It's since recovered to 63.
Yeah.
But it was an incredible opportunity to start companies, buy your own stock.
Yeah.
So you saw it.
Yeah. We talked about Berkley and Duvernay. I mean, they were, great growth stories, but, we, our core team, we always wanted what we'd call, create a real company. So a real company pays dividends. And, we got taken out with Berkley and Duvernay before we got to that kind of financial panacea, if you like, where we could pay dividends, and Tourmaline's lasted long enough. So we got over that hump. And so we started paying a dividend in 2018. It wasn't a very big one because we didn't have a lot of free cash flow. And then, we've evolved that model ever since. And so, I think we've attracted a yield-seeking shareholder base for part of our shareholder base, which I think is important. So we were a little ahead, I think, on this shareholder return concept. And we've kind of stuck with the dividends. Our buyback philosophy's been, really defensive rather than front foot aggressive and doing big buybacks. But, somewhere down the road when we execute on, the big BC build out that we're doing now, we're feeling really good about the free cash flow we'll have by the end of the decade will allow us to do all of that.
And on the subject of infrastructure, when did you start to realize that you needed to own it, start building more?
All the way through Berkley, Duvernay, Tourmaline, we've always owned and built our own infrastructure. Not for all of our volumes. I mean, in some cases, you will use third parties or midstreamers, but it's always been a core philosophy because coming into the room about where prices are right now, one of the best insulators is owning your infrastructure because your OPEX is significantly less than if you ran all your volumes through a third party.
You have enough infrastructure, you could almost spin out another company with that. But maybe for the listener, as a result of the low prices, why is owning your own infrastructure such a good idea? Maybe just to provide some context on that.
Well, your OPEX is much lower. So, when the gas price is low, you don't have a lot of margin left over. And so we're profitable below $2 a share, $2 an MCF. And that's the big difference. And infrastructure is a big part of it. The other part of it is, we're a low cost capital executor because we're good at it. We've got a brilliant bunch of engineers led by Earl McKinnon on the drilling completion and ops side. And so we're amongst the lowest cost as well. And those two factors make you profitable at much lower prices than, a lot of our peers anyway. And infrastructure is a key. And properly maintained, these plants will last, well over 60 years. So it just keeps paying you. Brian Robinson always says, it's not as sexy as the 100% IRR on a Montney horizontal. It's like a 20-25% IRR business. And that's exactly what it is. If you take all the capital we've invested in infrastructure, that's about what the yield is, if you like. But it lasts every year for 60 years. So it just pays you over and over and over.
One of the best ways to be successful in the business is to be low costs. Tourmaline has grown through the years. So how has the company remained lean and kept costs low, not too bureaucratic, and maintained your edge? How have you been able to do that?
Well, we kept the staff count relatively low. Obviously, we're a big company now, and I think we're the fourth largest producer in the country. So, you can't do that with a skeleton crew, particularly out in the field. I think, we've been really successful on finding, the best people and everything starts with the people, be it in the field or in the office. You want to find the best people and figure out how to retain them. And so I think we've done, a really good job on that. We've kept our geography consistent. So we, really it's Alberta Deep Basin, BC Montney for us. We're not in the Alberta Montney and the Peace River High, and we've had the same geography since the company started, and any of the M&A that we've executed on is within those three core areas. So we're not going out, into other provinces or into the United States, and so that really helps. And then, of course, systematically building that infrastructure through all of the assets is, an important piece of it, as discussed. And you need to keep your eye on costs. I mean, some of these acquisitions, part of the reason they're trading at a lower valuation is their, costs are too high. And so, we pick those up, and then it takes time to impart your lower cost structure on acquisitions. Sometimes 2 or 3 years. We're still working on Bonavista, but tons of wins that
Right.
we've been able to realize. So it's just, relentless focus, and we announced our BC infrastructure build out and how that improves all the operating metrics of the company, because we're developing the lowest capital cost, highest liquid content, highest margin inventory that we have as a company. So we'll lop a buck off our OPEX plus transport costs, and so all of the company will improve. But at the same time, it's like, okay, we're pretty sure this is going to work out really well. Let's have a look at the Deep Basin and do the same thing there. We're not building any more infrastructure, but let's look at all the opportunities now that we're big to just chip away at all aspects of the cost equation. So, every few years you got to get back at it and get everyone to have religion and, let's be the lowest cost guy in the whole basin, because that's what allows you to survive, prices that never seem to be where we want, but we think that's coming.
Yeah. Eventually.
We're excited about the future.
It will come.
Well, eventually. I think we're going to see much better pricing in the next few weeks. So for all kinds of in-basin and external reasons.
The companies remain lean, but sometimes when companies get big, they take on employees, end up doing layoffs, which Tourmaline has never done. You've been able to grow and stay nimble. Is it a mentality that you have? Is it a reminder that you think to yourself? What's an example of how you've been able to do that when other companies fail? Well,
we try and keep a relatively flat management structure. And so we have done that. So my management meeting is all the managers and the VPs at the same time. I think we're quick on decision making. That's an important part of it. I mean, we've been doing this long enough. We don't have to see something over and over again to know whether it's a good piece of business or not. I think morale, it wanes. Every employee watches the share price, so it goes up and down. But you mentioned layoffs, and we've never had a macro or commodity price driven widespread layoff. We talked about Shell, and that actually was one of the factors that made me think I'm probably not going to spend my whole career here, because they had gotten into significant layoffs over and over again, and you could see what a morale killer that was. And so it's been important in all three independents to avoid layoffs. It doesn't mean people will be moved out for non-performance or other things. It's sad when that happens, but it does happen. But we've never had a broad layoff, and don't plan to.
Do you view that as a driver of running a good company, or is it loyalty, or is it a bit of both?
It's a bit all of that. Yeah. If you end up with way too many staff, it's because you let it happen.
Right.
So you got to keep your eye on the ball.
You also work hard. You haven't really taken much time off ever, if I'm correct. Do you think
soon I take vacation. Yeah. But yes, both of us are fully engaged and
for years.
Nowhere close to retiring. Yeah.
Do you think that plain old hard work has really contributed to the culture and the success of Tourmaline?
Yeah.
People see you downtown every day.
Yeah. Well, I think people know that, all the senior management works hard. Mm-hmm. Yeah. And you know what? I think that goes for the vast majority of the whole patch here. I mean, it's, this is an early town. I mean, people are at work at 7:30 in the morning, and it's different. Mm-hmm. than, Toronto. I mean, people show up for work at 9. Now, I know maybe they work a little later, but it really is a different culture out west, and there's all kinds of reasons how that evolved. But I think it just makes people happier. I mean, you got to get up and go to work anyway. You might as well get up early, and then you can leave. Yeah.
Right. Also willing to do
when
podcasts.
It's still light out, although those days are creeping up on us.
In the era of low natural gas prices and the exploration receding, kind of not as important as it used to be, how valuable do you think that organic drilling and value creation process is in the energy business? That although it's not as important nowadays, it's still been one of the biggest things for Tourmaline through the years?
Yeah. To be fair, we've got 2 giant resource plays, and so we go at it with sort of machine-like efficiency. But, last 4 or 5 years, Colin Frostad and I was like, well, there's a ton of exploration opportunity. And some of what we're doing, it's not super high risk. It's a mix of kind of new pools or new zone, if you like. But this is trying out new horizons. So we've had a systematic effort for those 5 years to find out all the other zones and pools in and around our existing infrastructure, sticking with the same geography. And, it's been remarkably successful. I don't think the market likes it. I don't think they value it that much yet, but I think they're certainly positive and for it. But of the 25 TCF of 2P reserves we had at the end of 24, 2 came from this new zone, new pool effort. Yep. And, we're kind of 28 for 29 so far. So some of them are lower risk. We've created about 1,000 locations of our 24,000 location inventory through this program. So, we're almost, we're drilling about 300 wells a year. So we're almost replacing the inventory just with that exploration program. And when we find something, land sales are still, not terribly competitive, and we've been able to, follow up some of these, particularly the new pool ones, with, relatively, we think, inexpensive land sales. And, we've been doing it on both sides of the Alberta-BC border. BC still hasn't allowed land sales yet, so there's a bunch of follow-up things that we want to do there that we've been sitting on for 4 and 5 years now, that we're still excited about. I pull the maps out occasionally and say, man, we got to get this happening.
I remember wildcatting used to be on the Tourmaline corporate presentation circa 2015 even. Yeah. It's a spirit that has existed in the company for the whole time, it seems.
Yeah. So well, I mean, we always joke. I mean, it's the best business in the world. And when you're an exploration person or really just a geologist drilling wells, I mean, I always say it's like, there's no cure for this virus once you catch it. So,
But the other side of the business is capital allocation, which you've also been really good at. Tourmaline has leaned towards the dividend lately, but you initiated the buyback in August, I believe.
Reinitiated. I mean, to be fair, we haven't bought very many shares back. We bought some during COVID. And, we don't keep everybody happy with the capital allocation matrix that we have right now. We know that because they tell us. And some quarters would like us to, buy more shares back at this point in time. But building that sticky base of yield-seeking dividend shareholders, we're really happy that they're on board and supporting us. And as, the BC build-out is completed, I mean, we're going to get to 850,000 BOEs a day. And with, reasonable flat pricing, that'll be by 2031. So at, 65 and 4 for gas, I mean, we generate $3 billion in free cash a year. And with the inventory that we have, we can literally carry that on for decades. So that's when we can do a meaningful buyback.
Not to mention your own skin in the game. You consistently buy back shares on your own.
Well, yeah, that's what I use my dividend for, a portion of it anyway.
Massive
As
position.
you know, lots of people inside the company as well.
The debate sometimes is between your net asset value versus returning cash flow, aka return on equity. How do you think about that when you have so much inventory versus making money today for shareholders?
Yeah, well, it's hard to find that balance, and we're constantly looking at it as a management team and a board. We have a very supportive and super experienced board, so we think we've got the right mix now, but. We our ROCE, we think is going to be, in the teens this year. We'd like it, in the 20s if we, get the gas prices that we think we're going to get in 2026. That's, roughly where it should be. So, we look at all of those metrics in evaluating our business. And there is no one single metric that tells you, how you're doing. NAV, 2P NAV, before tax year-end 24 is over $100 a share. So we got some work to do because we've been kind of range-bound price-wise in that 60 to 70 range. And, I know some shareholders are like, well, heck, Mike, you've been, kind of been in this range for like 3 years now. When are we going to break out of that? And I think it's the gas world that is materializing, over the next really even few months with LNG Canada starting up. And we think that will provide, structurally improved AECO and Station 2 prices. Right now, there's a mix of things going on. There's a whole lot of maintenance at what we call the borders, so the West Gate and the East Gate. And so there's some downtime on Great Lakes, which was backing 400 million a day from the East Gate back in the Basin, and the GTN system, which is what we use to get gas to California, has a restriction as well. So in aggregate between the two, there's an extra BCF a day rattling around in the Basin at absolutely the wrong time. And LNG Canada has started up, and it's drawing, it looks like today, around 400 or 500 million a day. But this restriction at the borders is kind of masking any good news that you would have seen on the price support from LNG Canada startup. But I think, the maintenance all ends through the month of October. I think it's over by the beginning of November, which is, ironically the start of the gas year. LNG Canada phase 1, train 1 should be, pretty much at its full B a day. We're thinking, we're not in the project, so you have to check with the participants for that. But that's what we hear publicly. It should be at a B a day. And then just naturally between the second half of September and the second half of October, the intra-Alberta demand, if you take the average from the last 5 years, that flips 1.75 Bs a day from where you are. You hit your year low on intra-demand in the second half of September. And then you will add, if it's just an average year, 1.75 BCF. So if you think what's going to happen, you're going to stop, you're going to send a BCF a day out the borders when the maintenance is over. You're going to have another BCF a day of demand on LNG Canada, and then just your natural intra is going to add another 1.75. So we should see much stronger pricing November, and then 26, we're still optimistic that we'll see $4 AECO.
It sounds like it's a balance recipe maybe between your net asset value per share, making money for shareholders today. There's no single answer. You try and balance a bit of the two. And
patience is a virtue, and you have to be patient in this business, and you have to be patient, clearly waiting for better gas prices, and our investors do too, but you have to be patient on lands that you're seeking. You have to be patient on acquisitions, and sometimes it's just not the right time to do these things, but don't lose the idea, and sometimes it's 5 or 7 years. The little asset we bought from Strathcona, we'd been pursuing that from back when Pengrowth owned it 10 years ago, and it finally came around.
Yep.
And so just that's where sticking to your original geography and having probably a superior understanding of the subsurface really comes in. So as long as we don't lose our minds, we know where everything is.
And Tourmaline's been set up to weather the storm, so to speak, of low natural gas prices and complex systems, which are very hard to predict. So you have the infrastructure, you have the good assets, you're paying a dividend.
Got the inventory, you've got a very diversified gas marketing strategy. That we're the biggest exporter to the U.S., so that helps insulate against lower, in-basin prices here. But we talked about our BC build-out. The timing for that was always when LNG Canada started up, because we think that's the catalyst to create much improved pricing here, like what we see on the Gulf Coast or in California, except we'll see it here. And so we're, excited about having more growth and more volumes to meet that increasing demand. And, Canada, if we execute on LNG Canada Phase 2, the Rockies or Sea Lisms project, cedar and wood fiber, we're 6.5 Bs a day of exports on the West Coast, early next decade. That's a meaningful LNG business. And so we're excited to, be able to do our part, either providing supply or being in some of those projects. And the other thing that makes gas so attractive is that, we track the maturity of all the gas supply basins in North America. And, the good news for Canadian producers and the country itself is that our two big gas plays that we've been talking about in this interview are much earlier in productive life. So we've spent a lot of time on it, our entire careers actually. The Alberta Deep Basin, we see it about 17, 18% produced out. Montney is probably 5 or 6%. It's way earlier in development life. We think the Haynesville and the Marcellus Utica combo will hit their 50% produced out tipping point where production rolls into decline, either late this decade or early next decade. So, the other leg of demand for the Canadian gas industry is getting more gas south to the Gulf Coast, which is in the process of doubling its liquefaction capacity from 12 to 25 Bs a day. And we think they're going to get there right about the time their local supply starts to degrade. And so, we're excited about moving gas both ways. We've got 3 different contracts moving gas to the Gulf now. We're in the Rockies consortium, so we hope to be on the West Coast, and we're seeking more opportunities to get south with gas as well.
And so to get it from the source, 5% of Montney?
Yeah, but it's produced about 32 of 645 TCF. So we're just getting going.
Wow.
Yeah.
There's a lot of opportunity.
Yeah, you're like top of the first inning.
Holy cow.
Yeah. Pitching to Aaron Judge.
That has a lot of opportunity. And maybe for the listener, what does that represent for Tourmaline on the upside? Say if we were to get $3 or $4 natural gas, what does that mean?
Well, that's your, $3 to $4 billion of free cash flow per annum. So, if you looked at 2022, which, we saw $5 gas, our, shareholder return proposition was probably, in the $7 to $8 per share range for the year. So that's what we're kind of hoping for.
On the flip side, some critics might say they're unsure why Tourmaline continues to add volumes into a low natural gas price environment. Do you view it as the price recovering eventually and you'll be there for it when it does?
And, it's a very good question. And the reality is we haven't been adding volumes in our basin here in 23 and 24 and really so far in 25. Because prices are low, we keep deferring capital activity and saving those volumes for the higher price. So if, 2025, we deferred fracking in Q2 and in Q3, we still think we can hit our exit volume, but the overall average for the year will be down because of we're trying to match the production growth curve to the price curve. The other comment on, bringing more volumes into an ugly market, all of the volumes we've created in 23 and 24, we've moved out of the basin on these export contracts. So we had another 100 million a day, 150 actually over the last 2 years on the GTN system to California, and 200 million a day in LNG transport to the Gulf Coast. And so we actually haven't added any AECO or Station 2 volumes until, what we're planning with LNG Canada starting up and bringing those volumes. But if prices don't materialize the way, we think we've got it right, and I think the majority of industry is thinking the way we are, we can back off, and we don't, we have off ramps and can defer some of the Northeast BC infrastructure build out if we need to, and if that's the right decision for us and our shareholders.
Couple questions from Max before we get into current events, if you have time.
Yeah.
That's okay. Maybe one or two. This one's from Nick. What efforts has Tourmaline made during the last 6 to 9 months to increase exposure to pricing in Asia and Europe?
Well, we signed up our third LNG contract, and that's with Uniper. It kicks in November of 2027, but it's just under 100 million a day, and that'll be Canadian gas, Tourmaline gas going to Europe. The transport, the hardest part is establishing the transport routes to the Gulf because, all the pipelines are full. So we sort of, in 3 different ways, have been able to stitch together pipeline routes so that we actually physically move the gas from the Montney or the Alberta Deep Basin truly to the Gulf. They're not financial derivative contracts. And so we're continually seeking more of those. And then I think I mentioned we had another 150 million a day that's going to California, which at times trades with LNG prices.
Right.
We're in the Rockies or Sea Lisms Consortium, and that is, the federal government and the BC government provided the environmental certificate for that last week for the approving the liquefaction facility for that project. So it's looking kind of more real every day, and that's a 1.6 to 1.7 BCF increment on the West Coast. Realistically, it would be early next decade for the pipeline to be built. But it is an approved permitted route, and the permit was extended into perpetuity by the BC government earlier in the year. So it's coming together.
This one's from Bubble QE. Why is Tourmaline so big on the BC Montney development versus Alberta Montney?
Well, that's where our land is. So, yeah, we don't have much Montney in Alberta. And, of course, it's a pretty busy and expensive area, so hard for us to get in there. But we were able to establish those large BC Montney positions at relatively low cost.
And on a lighter note, do you keep buying Tourmaline shares? This one's from Tony, so that one day you may be in position to buy the Blue Jays.
Yeah, no. Although I'm amazed at what sports franchises, are valued at now, but no.
It's a good business.
I just don't think, I like baseball, but the only business I really know is oil and gas.
The hierarchy of energy needs may be characterized as something that needs to be reliable, available, secure, and affordable.
Yeah.
To what extent do you think natural gas checks all of these boxes?
Well, it does. And so, I've called it over the years the great enabler because it enables so many different things. It enables really all the energy stacks to be stable. And, it's an and discussion, not an or discussion, and it has been for some time. We need more of every different energy source, but obviously, nat gas enables renewables, and it'll, enables a cleaner environment by displacing coal-fired generation. It enables, getting 1.5 billion people elsewhere in the world out of energy poverty because it's the cleanest of the fossil fuel group, and we can do it with LNG. And I think we have a moral responsibility to enable those people that want, our standard of living and a better life for their children.
Energy abundance is roughly correlated to economic development, which is tied to human quality of life.
Yeah.
Which natural gas underpins every stage.
Yeah, I think it's the central part of every country's energy stack now. And there's been a remarkable over the last couple years, kind of for even the groups or the segment of the world that was kind of against any kind of fossil fuel, kind of an acquiescence that, natural gas, it's a pretty darn good story. I think our federal government believes that too. I mean, we're not, yes, burning natural gas creates emissions, but it's a lot less. It's the most energy dense on a weight basis of all the fossil fuels, and it has the least emissions. And, last time I checked, fossil fuels are 80% of the worldwide energy stack. We also like to talk about there is no energy transition. There never has been, because we've never transitioned off anything. So coal was supposed to replace wood 250 years ago. Wood's still 7% of the, they call it biomass now, but it's still 7% of the energy stack. And the world I haven't seen the 23 data. I'm sure Sarah's didn't go find it. But in 22, and I know what happened in 23 and will happen in 24, is the world set the all-time record for consumption of every energy source that there is on an annual basis. And that includes, coal and wood. All of them are growing. And, if you're looking at it from an environmental standard, all segments of that energy stack are working very hard to reduce emissions and provide, a cleaner energy overall. I understand that renewables, they're not burning anything, and so they're an important element. But then really all energy choices should be made on a full cycle cost and emissions basis, and then when you do that on renewables, well, there's an enormous amount of raw materials that have their own emission profile to create the renewables. So it's the most complex challenge that the developed world has, is that balance between providing enough energy, which is the backbone of modern civilization, clearly, and improving your environmental performance. And it's not easy.
Unfortunately, the critics of some energy sources like fossil fuels have been successful in their messaging the past 10 years, say. What do you think the traditional energy industry needs to do better to?
Well, I think we're doing a lot and a lot more. So CEOs are quite vocal. There's, a number, all of industry, advocates on its own behalf. We've had to certainly engage government a lot more than we ever thought we would. We have a small little and very good GR group at Tourmaline. If you asked me 10 years ago, you're going to have a GR group? It's like, are you kidding me? But it's become important because, we lost the narrative and we just, like many other industrial sectors and people, just kind of thought, government would stay in their lane and we'd stay in our lane. And, but clearly the world has changed significantly. So we're late to the game, but I think we have a wonderful story to tell, particularly in Canada. I mean, we have to be careful with C59, but we produce amongst the lowest emission natural gas in the world. You know what I really think on that. And, we're going to get it to the rest of the world. And, Canada's economy is not doing very well. What were we? 20th out of 20 in the G20 on per capita GDP growth, and our productivity's declining. And I think there's a realization from all across Canada, including provincial and federal government, that one of the big competitive advantages we have in this increasingly competitive world is the natural resources we're blessed with, all of them: water, forestry, mining, oil and gas, and improve the standard of living, ensure affordability for our citizens and their children and grandchildren, as we got to get after developing these resources. And I think we're the best in the world and the most environmentally conscious in all of the resource sectors. And it actually could be a really exciting, fun time for Canada. I hope it is. And glad I'm still able to work and do our contribution on the oil and gas piece of it. But we need all of it. And I think the federal government realizes that. So that's encouraging.
Canadian Energy, to put it in layman's terms, pays the bills, which could otherwise be known as building schools for your kids, building roads, hospitals, and maybe gifts under the Christmas tree.
Yeah,
at the end of the day.
Yeah, absolutely. No, you're bang on. And, as an industry, we can do a better job casting what we create as far as revenue and taxes and royalties in those kind of terms so that it's better understood. I mean, a lot of us kind of, we don't think about how other people think and perceive us as much as we should and what we do. We just think it's obvious, but, not everybody's, as far up the curve on oil and gas if that's what you do every day. So we can make it simpler and make it clear that, we really can contribute to growing our economy and improving the global environment.
But you're busy finding oil and managing capital.
Yeah. Yeah. Well, we have to do all those other things now too.
Yep. As we get towards the end, you haven't had to work for a while. What motivates you nowadays? What
I
gets you
just
out of bed
love
in the
it.
morning?
Yeah. As I said earlier, it's the best business in the world. So drilling wells, seeing well results, I get all the completion reports every 12 hours on every well we're drilling, and I read them all. That's kind of your litmus test on what you're doing. But there's so much more to it now, like all the creative marketing arrangements that are fantastic marketing crews coming up with, all the new technology, be it drilling, completion, or environmental performance improvement. Like we're kind of working all the factors and all the aspects of the business, and it's just fun to be there with all these smart people working on all this fantastic stuff.
Managing capital and finding oil is something you can do for quite some time without giving away your plans. Do you view running Tourmaline, either in the CEO role or as a chairman role, something you can do for a long time? Maybe
Well, I hope so. I mean,
80s or 90s?
The cap is usually some kind of health. So, yeah, hopefully I can go, for a reasonable amount of time or, be a mentor for, others who we've created, a whole hierarchy of fantastic people inside the company that can, run it at some point as well.
You've had a very successful career, but what advice would you give to a 30-year-old Mike Rose?
Well, I remember being told when I started at Shell that, this might not be a full career for you. And that was back in the days when, you're a lifer. Like when you got in the door on a super major, they'd look after you and you spend your whole life there. But they did kind of say, this might be a sunset industry. I think we're still way closer to sunrise than sunset.
Stick with it. Only 5% of the Montney's been developed.
Yeah. Yeah.
Lots of opportunity.
Yeah. And there's some other things to be found yet on the exploration side.
That's a question I think a lot of people would like to ask you at some point, but maybe for next time. I really appreciate your time today.
Yeah, no, thank you. Thanks for providing the opportunity and great interview.
And a quick shout out to Ian Dundas and Marty Staples for connecting us. Thank you
to
those guys.
Yeah, you bet.